Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update, and we are now on Thursday, the 25th of January, 2018, and we're just after 2:30, approaching 2:35 p.m. Central Standard Time. I'm laughing behind the scenes because I wrote last night and I wrote the other day, I said, you know, we have a big event this week. We have the President's Cabinet and the President in Davos. We have the European Central Bank meeting, and those events could produce any type of reaction in the market you don't know. At approximately 2 o'clock today, so I'm going back 35 minutes, the President made a statement that he's in favor of a strong dollar, and yesterday's comments by U.S. Treasury Secretary Mnuchin, who said that a lower dollar spurs on American trade, were misconstrued. Soon as he said that, gold had settled today. Settled. Remember, it's only 2:30 Chicago time. Settlement's 12:30 Chicago time. This market will trade to 4 p.m. Central time. Settled at $13.68. It is down $20 since he made that statement. Silver market settlement price today, $17.61.5. We're almost down 40 cents. The dollar has rallied rather dramatically, nearly a full penny off its low, and the euro came well off these highs. It's 140 points off of it. And I realize that, you know, my years of experience may not always be right, and they're often not. But what I've learned in charting and what I've learned in the marketplace is this. You don't stand in front of a moving train if you don't have to. We know that what we have in place out of the U.S. administration are a series of businessmen with a whole different slant on things, which many of us find refreshing. We also know that they're not going to talk like academics. And what Mr. Mnuchin said, maybe he should have thought and not said, because Treasury secretaries don't talk down their currency unless they want to start trade wars. And there was a rebuff, if you watched actually Mr. Draghi this morning, which I get up early and I watch all these things, as it was brought up. He never mentioned Mr. Mnuchin, but he brought up the concept that you don't talk down your currencies. That's my whole point. What does this mean? I don't know. It's a correction in the markets. That's what it is. When we go to the weekly chart of gold, you will be up in this area. Okay, so the settlement's going to come back. Even though you're here, you're going to go way up on a settlement basis. When you come to the daily area chart of closes, while I'm up here and you're down here, remember this chart's going to correct, because I already know, and you do, what the settlement price for Thursday is, because they settle the market about 3.5 hours before the market finishes trading. Got it? When we look at the daily bar, right now you have a reversal day down, but it's not going to show that tomorrow. So you've got to keep this in the back of your mind. We haven't done any damage on the swing line. You still got higher lows, higher highs. That part's still bullish. Can the market pull back and find support against the 18-day average and look good? You betcha. Will the market, if it closes like this, probably gap lower overnight? You betcha. Those would be the odds, but I don't know where we're going to finish the last part of the day. You always look to see where you're going to finish versus the settlement price. Is the market back under the Bollinger Band for this moment? Yes, it is. That number's 1356. I'll bet you anything right now, within reason, of course, make it a penny, that we're going to see a settlement price over 1356 today. We already know it. Got what I'm saying? I'm not being a wise guy. It's just simple. Momentum is not embedding. You're an overbought market. So as much as I sent out to my traders today new price counts on the gold and the silver, accompanying that, you've got to be careful, and you've got to realize that the idea of some of these is to show you the big picture where a market may go. The question is always entry point. That's how I look at markets. And when you get up to Bollinger Band tops, you'll see this all in a minute. I don't recall myself saying you buy a Bollinger Band top or you sell a Bollinger Band bottom. If I did, I erred. I don't recall ever doing that in decades since I learned Bollinger Bands. So we'll see. I don't know. Maybe I made a mistake, but I doubt it. Slow stochastic, trying to embed here, but it's a 15-minute chart. So it's into a resistance area. That's about as good as I can say. The gold-silver ratio, you can't go by this anymore. I want to see where it finished at the end of the day, but it's been coming down. Let's see what it does. In the GTF, whole different world, the GLD. I said GTF. GLD ETF. This market has not put in a settlement, and you can see one day over the upper Bollinger Band sinking back. Okay, this to me is very important, though. You're losing the embedded reading, and if you lose it, the odds favor price and this 18-day average are going to try to make a run at each other. That's not a bad thing, because you can get this up a little more, and it can be over this last break low, and it could be right into a support area. But let the market work off being overbought. The GDX did not go with everything at this point. I saw this coming down. I saw an interesting conversation today also. I think it was Bloomberg that had it on PICK, another ETF that deals often with mining stocks as well. You might want to look into that one. Interesting, they claim this has more capitalization to it. Lower low, higher high, upper Bollinger Band doing its job, acting as resistance. Silver. Look where the market fell back to intraday, right to that 18-day average. But it's not a trend yet. It's also, remember what I said to you for now, I think began yesterday again. First off, I said, and I've been saying this for about a week and a half, 2 weeks, this 200-day average is very important. The fact that they're all grouped together in red, the 18, the dark lines, the 200, and the greens, the 100. This is where this market is. I'll use the word pivoting, centering itself around. Are we going to see world economies push industrial metals higher, or was this a run that was on its own? Will inflation be coming? Are these metals going to get a play off of that? There's so many questions, and it's all happening pretty much in sideways action right now. Copper's the same thing. You tried to get down, you hit the 100-day average 2 days ago, you went yesterday and today through the last swing line high, and now the resistance is that 18-day average without a trend. Momentum is up, bias is down, it's a confusing market. In the platinum market, we didn't get an outside day down, and we've been able to keep the embedded reading. So still a market that this rules the day. It still has a lot of upside bias, but you can see it's having trouble getting to the upper Bollinger Band. It looks a little tired. And when we go to the palladium market, it, like the platinum market, comes down, but now we have a market, if we go to yesterday's low, of 1087.55. Even on this break, couldn't quite get through that. But you've already had the lower highs, lower lows. So you have a market that's still neutral. Why do I say neutral? When you settle, and you did, over the 18-day average, that's bullish bias. Momentum is pointing down, and the swing line is down. What's really, I think, occurring is you're trying to take in these Bollinger Bands, and that's these black lines which an algorithm made to keep the market trade within them 95% of the time. And to get out of them, you often go through a period of sideways action, just like a spring in a pipe, and then you pop one way or the other. And that's what I think it's again doing. It's trying to get that moving. In the dollar index, I don't find it an accident that the market has rallied back over the upper Bollinger Band. Is anything on the trend changed? Absolutely not. You have lower highs, lower lows. I still think the trade will be looking, as long as you keep the embedded reading, to be playing the bear side of that particular market. Stock market took a big hit on the president cleaning up Mr. Mnuchin, and now it seems to be coming back, especially in the Dow. We'll see if the other indices can come back with it or not. And keep your eye on the energies. This is the highest price we've seen in years, many years, 66. Market gave it up, but so what? All it did is come up to an area of some resistance, and I'll cover that in our financial update. I want to remind you with one of the tools that I use, and it's called From the Moore Research Center. Now, what this is the Moore Research goes into databases and looks back in their computers that if you get into a commodity long or short on a certain day and get out on another day, what were the percentages of that making a profit? It keeps in its database a record of only those trades that out of the past 15 years, if a contract's traded that long, for what it has done. And as long as it hasn't failed 3 of those 15 years, it stays in the database or gets moved into it. That does not mean that trade's going to work when you put it on. Let me make some guarantees. Young in my career, and I've got gray hair, young, I've been with the service a long time, I'd say, look at this, it's phenomenal. I was like Swiss cheese. How come it was 100% of the time, now it's down to 93% accuracy after I'm the guy that chose it, or 87% or whatever it is? It's a tool, no different than a moving average, a Bollinger Band, a slow stochastic, a window envelope. It's a tool. The nice part of the tool is it gives you an idea what a seasonal might be. We plant corn, we plant wheat, we plant soybeans. Is the crop going to go up or down early on in planting? Later in maturity, what does the weather do? I can go on and on with this. Winter comes, summer comes, what happens to gasoline prices? So you're playing the seasonals. Do they always work? Absolutely not. But it's another idea, and the beauty is they give you interactive seasonal chart patterns so you can look at general trends. Then they give you a features article and explanation of each trade as to where they come about and so on and so forth. Another tool. If you've not seen this, this is a great way to get a free trial to it. Give us a call, go to our website, and yeah, they charge for this, but not with our free trial. You can come up here, click right here if you're watching me on YouTube, or underneath us, it'll say click here for Ira's free information. Take a look at another tool, but remember the caveat. I don't care if it worked 100%. The time you take it, it probably won't work. Got it? I'm Ira Epstein. You have a good day.